Alright, I got a couple stocks here I want to talk about. I'm looking to place a cover call or a poor man's cover call on these, and what I like to do is I like to find these value stocks that are they have strong fundamentals and they're kind of a generational stock. They've been around for a while. Now, there's a couple of different ones that dipped down in the past week. The market kind of had a good dip, so I think it's a good opportunity to put a cover call on these. Now, on these value stocks, I like cover calls because they don't have a huge amount of upside to it. I'm not saying it's not going to go up or anything, but if it does go up, it's going to go up real slow, and that's the type of stock you want to run a cover call on. Any kind of growth stock that I think is going to double or triple, I'm not going to put a cover call on there. First one I want to look at here is Walmart. Walmart dipped down pretty good here in the past couple weeks, and looking at the chart here, there's a lot of consolidation up here. It's trying to move higher, it's trying to move lower, and eventually it looked like after earnings it dipped down. Now, I like to use this horizontal volume as a support and resistance, and I use the point of control, which would be the widest point here, as kind of like it has a pull, it has like a gravity to it, so if it falls then it's going to come back up. If it goes up past this, it's probably going to come back down eventually, and of course that it's never perfect like that, so it may never go back up there, and so it's just like any other technical indicator. But I like this because it's objective and it tells me where all the volume was, where all the shares was purchased. I know there's a lot of buyers up here that are bag holding, for example, and they probably sold out right about here, and the shorts are probably about to cover their positions also here. Anyways, it dipped down to this third level of support here. When you look at the volume, you get one, two, three. Here's the third one. So I really think this is a really strong place to buy from. Walmart isn't going to be shorted into the ground anytime soon as far as I'm concerned. So here I'm going to be looking for I would like to run a poor man's cover call on this. You do need to pay attention because this probably has a lot of volatility to it right now. You might want to let it sizzle out just a little bit for that volatility to come down. You don't want to place a poor man's cover call with high volatility. Or if you have the capital, you can run just a regular cover call on this with 100 shares. But I do think this is a good spot for anyone trying to buy into this, and it's a good spot to run a poor man's cover call. It might sit in neutral right here for a while, and you're just gonna be collecting theta. All right, so that's the chart, and let's look at the fundamentals just briefly here. We all know Walmart's a pretty good company. A lot of things that stand out is they got a bunch of cash. Their free cash flow is $9. Total debt to equity is 72%. Net income $13 billion. Let's look what else we can find here. A really low short interest. They are a dividend stock, so there's going to be a lot of long-term holders buying in, especially on the dips here. Revenue year over year is about 7%. They are highly profitable. The PE ratio is 23. It might be a little bit lower. I don't know if this has been updated since it's dipped. Their earnings per share is about 1.5. And since the last quarter, revenue is up about 20 billion. And here's a little just recap of everything I just went through. You got earnings per share, 5, PE ratio 23, and the dividend yield is 1.7. And that's just a quick little run through. If you want to go deeper into the fundamentals, you can, but when you're just running covered calls, you're kind of just, in my opinion, you're wanting to just get the overview of this and not spend a ton of time researching it. If you're holding this long term, then yeah, you would want to spend a lot more time. Next one I want to look at real quick is Procter & Gamble. They sell a bunch of non-food items that you'll find in like Walmart. Anything that has to do with hygiene or whatever. Anything that's in CVS, definitely. You probably have a bunch of Procter & Gamble stuff at your house right now. Now, this is another really kind of old boomer stock, if you want to say that. They've been around forever, ain't going nowhere. Now this one is taking a really big dip here. I want to say you're necessarily catching a falling knife here. It's dipped down to really strong support if you look here. And it was consolidating big time right here, and this is actually when I got in, so I'm sitting at a little bit of a loss. But that's kind of what you want to see. You want to see a little consolidation, let it vibrate back and forth a little bit before you get in, so you're not catching a falling knife. So you may want to wait a day or two on this. It's up to you to see if it dips down anymore here. I would go ahead and get in if I was looking at this right now. Like I said, you can run a poor man's covered call. You can run a regular covered call if you got the capital for it. It's going to be a lot. It's going to be about 12 grand. Maybe less if you're on a margin account. The point of control on the horizontal volume was way up here, and looks like it got shorted all the way back down here. So that's the chart, and that's my opinion on all that. Let's go to the fundamentals real quick. Procter & Gamble has pretty good cash flow like Walmart does. Cash from operations 19 billion, cash flow $6.5. Total debt to equity 64%. Net income 13 billion. Low short interest. Market cap is 305 billion. They are a pretty good dividend stock, just like Walmart is. They have good profitability here. You can see they got 19% margin. Revenue year over year, kind of like Walmart, it's about 6%. PE is 21. The annual EPS is about 5. The quarterly is, let's see, it's about 1.5. Revenue is up slightly, looks like. Or no, that's the estimate, sorry. Right here. Yeah, it is still up slightly. It's about up 3 billion. And here's the summary of everything. You got the earnings per share, almost 6, PE ratio 21, dividend yield 2.5, market cap 305 billion. Also, I like to look at just the ratings, what Wall Street thinks, and the I get on the Seeking Alpha website. I think it's really good to just kind of get a brief overview of the fundamentals. There's some neutral people on here. They have to post whether they're bullish, bearish, or neutral. And mainly people are bullish on Wall Street and Seeking Alpha. I want to just briefly say what I do with poor man's covered calls. I do go about 4 months out. I'll show you that right now. I like to go about 4 months out. Some people prefer a little later. It's a little bit of a preference, but my thoughts behind it is that well, I know for sure the longer you go out, the less of a delta you're going to get. So you can go way out if you want, if you have that much capital. Like if I want to go October, I mean, you can. There's not much volume or anything. It's going to cost about $2,700 or whatever buying power. But if you want to limit your buying power requirements, kind of like I do, if you want to just if you're not trading a huge account, then I would recommend you go in right now to about June or July. And I'm looking anything between 75 and 85 delta. I don't see a point of going way up as far as you can. You're just increasing your margin requirement. So if I was getting this trade right now, I would get maybe 110 July call, or you could do 115. The delta, you're saving a bunch of buying power, and from 115 to 110, you're only getting 10 delta. So you can just go to 115 and save like $500 in buying power. Anyways, that would be my long call in July. And for my short call, you can go 4 days out, or you can go to the next week. I would look for at least $25. So go as far down as you can for the short side and get at least $25. You can probably get a little bit more. I would go to the next week probably. You can go further out here. Look for that call probably $34, or there's a $24 one here. So that's my idea when it comes to poor man's cover call. Feel free to just run a regular cover call on this. Like I said, it's going to be a crap ton of buying power. Let's see. It's saying I need $6,000 in buying power. I don't know if that's accurate, but it's going to be a lot more anyways. Alright, that's all I got for you guys. Like I said, these are the kind of stocks you want to run poor man's cover calls or regular cover calls on. These really good value stocks, and they're going to be a good just income generator for you. Try to stay patient. It may take a couple months on this, and just don't get spooked out of the trade. Just hold on to it. Because these are stocks that if they dip down, they're probably going to get rebid and just go right back up eventually, but you're going to need you're going to need to stay patient on these. And the reason I like these two is because, the market dips down again here. These are already dipped down pretty good, so they're not going to go that much farther if the market crashes, for example. And so that's why I like these two, and I think it's a good trade idea that I have a lot of conviction in. So I wanted to share that with you guys, and that's all I got. Thanks for watching.